All right, what's going on, guys? This is episode 18, I believe, Off the Record with k.jachimowicz. And I think this is like the third one I've recorded today. I'm on like an absolute blitz. I'm just trying to be as productive as humanly possible lately and do things that I want to do. But this episode that I'm recording today, I want to talk about how the stock market is rigged against us, specifically with the naked short selling technique, GameStop, and how that saga has not concluded yet, and Wall Street's biggest scam. So, what if I told you that the shares sitting in your investment account might not be real? That Wall Street has been counterfeiting stocks for decades, creating fake shares out of thin air, crushing businesses on purpose, and walking away with tax-free billions of dollars. And worse, regulators are aware of this and doing nothing. This isn't a fringe conspiracy theory. It's documented, it's proven, and if you were paying attention in 2021, you saw it happen in real time with GameStop. But here's the thing. This isn't just about GameStop. This is about an entire financial system built on fraud. Today, we're diving into the hidden world of naked short selling, how hedge funds and banks have rigged the market, how they've bankrupted entire industries, and how for the first time in history they might finally get caught. So let's start with the basics, because once you understand how this scam works, you'll never look at the stock market the same way ever again. What is naked short selling? Short selling is when you bet that a stock is going to drop in price. Normally, you borrow shares from someone else, sell them, wait for the price to drop, then buy them back cheaper, returning the borrowed shares and keeping the difference as profit. Simple. But naked short selling, that's a whole different game. That's when they skip the whole borrowing part and just sell shares that don't even exist, literally making them up out of thin air. There was a Morgan Stanley whistleblower who even was quoted on camera, it's on YouTube too, saying, "I would illegally make and short stocks every day," naked short selling, every day, and the bank did not care. So we have senior bankers at Morgan Stanley admitting to this on record, that not only is this happening, it happens every single day, and the banks are in total approval and accordance of it. The big banks, hedge funds, and prime lenders are all in on it. This isn't an accident, it's the business model and design. And you don't have to take my word for it. You can look at what happened in 2020 when Citadel got fined by FINRA for, quote, selling something, failing to deliver it, and never having had any way to borrow it in the first place, unquote. Here's why this is a massive problem. These fake shares dilute the real ones, tanking stock prices. And it doesn't stop there. This strategy is used systematically to destroy companies. That's exactly what's happened to Blockbuster, Sears, Circuit City, and almost happened to GameStop, and has likely happened to all sorts of other companies that are smaller, and is why we're living in this dystopian corporate world. So, the corporate hit list. How hedge funds kill companies. So here's the playbook for how Wall Street takes down a company. It's happened over and over and over and over and over again, for probably a lot longer than any of us have realized. They find a struggling company. They short it into oblivion, flooding the market with fake shares. They control the media narrative, planning articles filled with fear, uncertainty, and doubt, using bots on social media to push the negativity and to make people panic sell, which is a very real thing that happens in real time on all these apps. I can see it live every day. They bring in consulting firms like Boston Consulting Group, who charge millions of dollars while doing nothing to actually fix the business on purpose by design. They drive the company into bankruptcy, and when that happens, the short sellers never have to buy back the fake shares they created, meaning they walk away with pure tax-free profit. This is exactly what happened to Blockbuster and Toys R Us and Sears and nearly GameStop. Let's talk about GameStop, because this is where things really change. So how retail investors exposed the scam. And I really didn't realize how far this went back then. Like, I knew stuff was going on, but now I'm really like wrapping my whole head around what potentially was going on here. And this is still playing out, by the way. And it's not financial advice, but this isn't over. And yeah, sure, they'll skirt it a million ways they can, but it's not over. So in 2021, something happened that Wall Street didn't see coming. Retail investors, normal everyday people, caught them. GameStop stock was being shorted to hell. At one point, the short interest was 300%, meaning 3 times the number of shares that actually existed had been short sold. Which means one thing: massive illegal naked short selling. Wall Street was about to run the same play they always do: drive the company into the ground, walk away rich. And this also coincides with like Amazon and these digital behemoths trying to overtake video game, selling and etc. So, but this time retail investors didn't sell, they held. The price exploded. There was a short squeeze, the MOAS, mother of all short squeezes, people refer to it as. And suddenly hedge funds were trapped in their own scam, because in a short squeeze, the only way out is to buy back the stock, driving the price even more higher. This should have sent the stock price to the moon, but that's not what happened. In the SEC's own report, it shows that short sellers never actually closed their position. Instead, the price was artificially suppressed through media manipulation, bot attacks, and something even more sinister: dark pools. And the bot attacks are very real. You can go back to 2021, and it's still going on now with MicroStrategy, even in other companies, where you can see there's FUD bot attacks where people are copy and pasting, and it's 50 different accounts are posting this thing everywhere, telling you to panic sell, oh my God, the world's going to end. And they're just emotionally preying on, mentally unaware people that are looking in stupid places for, serious information for critical decision making involving finances. So the dark pools and hidden corruption. So let's talk about dark pools. These are private exchanges where institutions can trade stocks away from the public market. It's like a backroom poker game where they can manipulate prices without you seeing. In December 2023, almost 50% of all GameStop trades happened in dark pools. That means the price you saw on the market wasn't real. And even today, nearly half of all GameStop trades are still short sales. They are still trying to bury this stock, because if they ever have to buy back all those fake shares they created, they are screwed. Think about what that means. If they are this trapped on one stock, what does this say about the entire stock market? This isn't just about GameStop. This is the entire financial system built on leverage, swaps, and fabricated shares. And like the Morgan Stanley banker said, they do this every day. Why this matters and what's next. So what does this all mean? It means the stock market is a rigged casino where the house always wins. It means retail investors never had a fair shot. It means Wall Street has been counterfeiting shares, bankrupting businesses, and robbing people blind for decades. In the SEC, the regulators, they know. They just look the other way. But this time, they could be trapped. Because GameStop holders are still there, they're still holding and watching. And if they're right, if this house of cards can finally collapse, we're looking at the biggest financial scandal of all time. And the best part is that it's still all happening in real time. So now I want to talk about the illusion of retail influence and emotional manipulation in the stock market. Let's talk about another one of the biggest lies in the stock market. The idea that retail investors actually move the prices at all. We've been sold this fantasy. Everyone in the country forever has been sold this fantasy that if enough people buy a stock, the price is going to go up endlessly. If they sell, it'll go down. That's how a free market is supposed to work, right? Supply and demand? Wrong. Because in reality, retail trades don't make a dent. The market is structured in a way where your buy and sell orders are processed in a rigged system that absorbs your impact and feeds it straight into institutional hands. Let me explain how. Payment for order flow. How retail orders are sold to the enemy. Ever wonder why trading is free on apps like Robinhood? No commissions, no fees? It's because of something called payment for order flow, a system where your trades never even hit the real stock market. Instead, they're sold off to market makers like Citadel Securities, who process your trade, match it internally, and decide if it even reaches the actual exchange. So if thousands of retail traders are buying a stock at the same time, but those orders never hit the market, does the stock price move? No. Instead, market makers front-run your trades, take the other side of your position, and use your own buying pressure as liquidity for their own short selling. This is why even when GameStop had massive retail demand, the price was dropping. The data shows that retail was buying, but the price was tanking. That's the market maker siphoning off retail demand and keeping the price suppressed. I can also see this taking place, or certain things akin to this type of trickery and weaponization of retail has taken place with MicroStrategy, I believe, personally, in my opinion. But I don't think that's going to be able to last forever either. How emotions are weaponized against retail investors. Now, if that wasn't enough, let's talk about how hedge funds manipulate retail emotions to steal even more money. because the market isn't just the numbers on a screen. It's psychological warfare. And Wall Street preys on your emotions to make sure you panic at the wrong time and or FOMO in at the wrong time. They use 4 main tactics. Media, this includes social media, manipulation, and narrative control. Every financial news outlet, CNBC, Bloomberg, and even social media influencers are tools for Wall Street. When they want to push a stock down, suddenly you'll see negative headlines everywhere. GameStop's a dying business, AMC's a terrible investment, Tesla is overvalued. These narratives are planted to create doubt and trigger emotional selling. And when they want to pump a stock, you'll see glowing articles about breakout stocks and the next big thing, right before they dump their shares onto retail. This is not a coincidence. It's a coordinated effort to manipulate sentiment and behavior and decision making. Social media bots and fake community posts. You ever notice how when a stock is being heavily manipulated, your Twitter feed, Reddit thread, and YouTube comments, and etc. are suddenly flooded with people pushing the same talking points? That's because hedge funds use AI-driven bot farms to spam retail investor spaces. They push messages like, "The stock is dead, get out while you can. Everyone's selling, why are you still holding? I just sold everything, you should too." These are not real investors. These are bots and shills designed to trigger fear and uncertainty. And on the flip side, when hedge funds want to pump a stock before they dump on retail, they'll flood social media with bullish hype, luring in unsuspecting investors. Strategic price manipulation, stop-loss hunts, and bear raids. Price action itself is a weapon. Hedge funds will run stop-loss hunts where they manipulate the stock price to dip just low enough to trigger retail stop-losses. Then they buy back shares at a discount. They also use, quote, bear raids, massive coordinated short-selling attacks to trigger panic selling. When you see a stock randomly drop 10 or 20% with no news, chances are it's an orchestrated attack to shake out weak hands. Fake breakouts and FOMO bait. Just like they create fear, they also create fake hype. They'll pump a stock just enough to trigger retail FOMO. Retail jumps in thinking it's a breakout, and then the rug gets pulled. Hedge funds dump their shares at the peak, leaving retail to hold the bag. The ultimate scam. Retail is exit liquidity. The bottom line. Retail investors can almost always be liquidity for hedge funds. That's it. The entire system is designed to make sure big money gets in first, uses retail's excitement or fear to build their positions, and then cashes out when retail is left holding the bag. You don't move the market, they do. Your emotions are prey. They manipulate them, and as long as this system is in place, retail is fighting with one hand tied behind its back. So if retail can't move the market, if their orders are being manipulated, and if the system is rigged against them, what's the way out? That's the real question. And the answer is they don't want you to know. But what happened with GameStop in 2021 scared them, because retail for the first time did not fall for the tricks. They didn't sell. They didn't panic. They watched, learned, and exposed the game. And what happens if that continues? If more people wake up to how this is all really working? Well, that's Wall Street's worst nightmare. Real-world examples of market manipulation. Tesla FUD, media and market manipulation in action. Tesla has been one of the most heavily manipulated stocks in history, not just because it's volatile, but because it represents a major threat to legacy automakers, oil companies, and entrenched financial interests. For example, the 2023 Tesla crash that wasn't. Before Q1 2023 earnings, financial media outlets started pushing headlines that Tesla's demand was drying up, that EV sales are plummeting, and that Elon Musk was slashing prices because he was desperate. Meanwhile, Tesla's sales were actually growing, but the negative sentiment triggered a massive short attack, dropping the stock 12% in days. Then, Tesla beat earning expectations, reported record deliveries, and the stock rebounded hard, proving that the fear campaign was completely fabricated. And you can also see this recently with their earnings were down just on the past call, and their stock soared after. So it's all putting any emotion to this is fucking idiotic because it's all controlled, and there's nothing unless you got 500 million you're about to drop a bag into some company, you ain't doing shit, dog. Real talk. So hedge funds and institutions used the FUD to shake out weak retail investors, load up at a discount, and profit on the rebound. When you see sudden waves of negative news without fundamental changes in the company, it's often a coordinated effort to create fear and drive the price down. I personally feel like I've seen this with MicroStrategy as well. I think MicroStrategy is most likely experiencing and has experienced similar tactics. And, all these companies could be running their own tactics too against retail, against Wall Street. It's all over the place. So, for example, in 2022 with MicroStrategy, they're the largest publicly traded holder of Bitcoin, which makes them a massive target for manipulation in the market. In June 2022, there was a Michael Saylor margin call lie. So Bitcoin was crashing and hedge funds pushed a massive media blitz claiming Michael Saylor and MicroStrategy were facing a margin call at $21,000 per Bitcoin. This was completely false. MicroStrategy had plenty of collateral and was nowhere close to liquidation. The goal of the FUD was simple: scare Bitcoin investors, trigger panic selling, and drive the price down further for accumulation. A few months later, Bitcoin rebounded, MicroStrategy bought more Bitcoin at the bottom, and hedge funds closed their short positions at a profit. When you see news about a company being on the verge of collapse, always check the actual financials and statistics. If it's based on speculation and no data, it's likely a hit job. How to protect yourself from market manipulation. Ignore media hype and noise, and do as much of your own research as possible, and trust your intuition. If CNBC, Bloomberg, and mainstream analysts are all saying the exact same thing, assume it's narrative control and campaign and not objective analysis. Cross-check news with official filings, earning reports, actual company fundamentals, and more. Watch data, not noise. Monitor short interest, dark pool activity, and options flow. Tools like Ortex, FINRA reports, and unusual whales can help. If a stock is dropping on good news or pumping on bad news, ask who benefits from the move. Understand market cycles and institutional games. Institutions and hedge funds manipulate stock prices to shake out retail and accumulate at discounts. Look for signs of accumulation, high volume buying, big insider purchases, options bets. And you need to operate like them. Like, they're going out there on X manipulating the prices to shake out retail. Go try to manipulate them back and fucking obfuscate it further. Like, literally. Control your emotions and avoid panic selling. Market makers use fear and greed against you. If a stock you believe is crashing on FUD, not fundamentals, it's often a buying opportunity. Set stop losses strategically, not too tight, or you get stop hunted. I don't even get involved in that personally myself. I like doing everything manually because I don't trust fucking anything. I personally believe that, like, the way data is now, I wouldn't be surprised if these brokerages and stuff are, like, immediately, like, you know, sending data out, like, oh my God, like, X amount of people just invested X amount of money in this, so we got to do this strategy to fuck over X amount of people and take X amount of money. Like, I wouldn't be surprised at all if that data is flying all over the place immediately. I wouldn't put anything past it. Money runs everything. Avoid over leveraging and margin debt. I mean, I don't even get into options trading, so I'm not even getting into all that, but just leverage in general. Leverage is how institutions wreck retail. They induce volatility to force margin calls and liquidate positions. Stay in control by using low or no leverage and keeping a cash buffer for dips. So yeah, always keep, you know, dry powder, extra cash side for these games, you know. And, like, don't be afraid to swing trade if you need to either. Like, there's so much manipulation going on. If you're in the green on something, don't be screenshotting it forever. Just fucking take some profit if you need to. Like, if it's an individual company or something, or, you know, like, and it's very interesting. Like, even these AI wars that are going on with DeepSeek and everything, like, there's a very real possibility that there's, like, a global orchestrated campaign aspect to that to tank the market, because that's all a completely, you know, orchestrated media campaign of, like, oh my God, this AI threat is here. Everyone freak out because the stock market's going to tank now. You all need to sell. We're all fucked. Oh my God, everyone's retirement's going up in flames. It's possible it's a threat. It's also very possible it's a fucking trick to rob everyone blind. One last rug pull on the older generation or some shit. I don't know. That's just where my head goes to naturally, because if they're playing this level of game, what makes you think they're not lying about a fucking stupid app? Like, of course they will. So, retail traders are not powerless, but we are the prey in the system. The key to this survival is understanding how the game is played, spotting manipulation before it happens, and refusing to be emotional exit liquidity. Stay sharp, stay skeptical, and most importantly, follow money, not noise. Oh, and before I go, I actually wanted to say one more thing about the DeepSeek situation. Hold up. Let me pull this back up. So the DeepSeek attack happened, I don't know, a couple days or a week ago now, but I told you guys in a previous episode that DeepSeek and OpenAI seem to have been going up and down at the same time for 2 or 3 days in a row. So I don't know if that's like China and US like doing denial of service attacks on each other. But so from the 25th to 29th, in a period of 83 hours, the DeepSeek server cluster was hit by more than 230 million DDoS malicious requests per second. The total amount of attack was equivalent to the total network traffic in Europe for 3 days. So there's people speculating that the CIA hit DeepSeek with these insane DDoS attacks, or that it was some, government like entity doing this. And there's articles claiming all the attacks came from the US. But this is China saying this also. So it's like, you know what I mean? But apparently there are major brute force efforts coming from US-based IP addresses to like annihilate DeepSeek's stability right now. And I've noticed that in real time playing out as well myself. Not that I give a shit about that app or I'm about to give it any information that I care about. But yeah, it's crazy out here, guys. Stay sharp, man. Stay skeptical. Stay awake. And have a good rest of your weekend, y'all. I might have another podcast for you by the end of the night, the rate I'm going. But I hope you enjoyed this one, even though it was a little shorter. I hope it was informative. I hope this sheds some light on some stuff that you may not have been like hyper aware of at the moment. And maybe it'll snap you out of some, psychological BS you could be in. And follow me on Instagram at k.jachimowicz. Follow me on X at k.jachimowicz. Follow me on YouTube at k.jachimowicz. Subscribe to the podcast on Apple Podcasts, Spotify, YouTube, wherever you consume this stuff. Write me a written review if you can on Apple Podcasts. Leave me a rating on there, on Spotify, or comment on YouTube, whatever, wherever you watch it. And thank you for listening this far. If you did, I appreciate it. And like I said, have a good rest of your weekend. Peace.